Per usual, living on this channel is for educational purposes only and is not intended as financial advice. So let's take a look at some of the look into Bitcoin charts. Look into Bitcoin.com. Nifty little site, shows a bunch of useful charts and data. Start with the 2-year MA multiplier. Historically, hopefully at this time, everybody watching this video has seen some variation of this by me or other people, but how this works is you pick an MA and then you multiply it by a multiple and you start backtesting what makes sense. This shows you the buy zone, this shows you the sell zone. So that's the first step, does it all make sense? Does it tell you what you want any indicator to tell you, which is where do I buy, where do I sell, right? That's the classic response. What do I do, Josh, on Twitter or whatever in the YouTube comments? And I'm watching the same movie you're watching, so just look at these charts, right? So how I would read this is anything below the 730, which is the 2-year MA. Again, these are arbitrary. It can be whatever you want it to be. It just so happens that this makes sense on backtesting. And it's important to think of it that way when you use this type of indicator for altcoins. So you'd be buying anything below 730, you'd be selling anything above 730 times 5. On backtesting, this looks, I don't use the word perfect often, but it looks pretty perfect. You can say maybe in here it gets a little wishy-washy because it tells you to sell instead of hold for higher gains, okay. But overall, this is a pretty good hit rate on buys and lows, highs and lows. And currently it's saying 77K is the ceiling before we get into overbought territory. Another way to read this is if I'm selling continuously anything above red, or I'm selling everything as soon as we cross below red after we've been there for an extended period of time. That way it prevents you from selling too early here. And you can measure the duration we've been above the multiplier previously, which is around 3 to 4 weeks. So that's why when I say we've probably got 3 to 4 weeks after we break above 77K, that's where that comes from. It comes from what's happened previously on this specific multiplier. Now you can tighten this up probably using a different multiplier like times 6 instead of times 5. If you want to snipe the exact top, you can try to do something like that. It is what it is. Do whatever you make sense for you, but the 5x looks fine. So TLDR, 77K is the ceiling right now. Anything above that's going to we're going to be insanity zone. That isn't predicting a price above that. It's just giving you a time component with the overbought conditions. Historically, we've only lasted 3 to 4 weeks above that zone before selling off for good. That suggests it will be the local top for a while. Now you can say, all right, well, Josh, in 2013, it went up twice, okay. We'll cross that bridge when we get to it, I guess. But, this is another knock against this indicator. If you're selling everything here, it doesn't give you a chance to rebuy because you're not getting back into the buy zone. So that's also something to consider. But anyways, that's that indicator. It looks fine. Looks like we have more room for up. Pi cycle and top indicator. I headed this off at the pass last week when I broke this down and said, look, this indicator, ignore it. It's going to cross this week. Doesn't matter. I've seen maybe 1 or 2 people talk about it on Twitter. So for the most part, I think everybody's just distracted looking at other stuff. But it has crossed. I don't think it's a big deal. How this works is it's the 2-year multiplier crossed with the 111 MA. All this is just back testing. Previously, it looked really good, right? It basically sniped all 3 previous all-time highs, and it did so within 3 to 4 days of that happening. So if we start selling off, then everyone's going to say, oh, the Pi cycle top indicator called it, boys. We should have been paying attention, I guess. But in light of everything else, it doesn't really make sense to see this as a top just yet. So I think this is just going to break down and go by the wayside. 200-week moving average heat map. How this works is if the 200-week is moving up extremely quickly, percentage-wise, these bubbles will start to turn green and then red, which is overheated. You can see we've got three or 4 weeks again of caution before devastation. And we're not there yet. We're still in this yellow puke green color. If anything, we're slowing down up here, which is exactly what you want to see when we are already semi-overbought. We don't want to, it's a marathon, not a sprint. Best analogy ever. You don't want this to go to 700,000 tomorrow. It would just be mayhem. Puel multiple, Basically notional coin issuance versus notional coin issuance over the past year. How rich are the miners? Are they tempted to sell? I'll look at the miner stuff again in another way in a second, but Puel multiple is not in any danger of being in overbought territory. The miners aren't too tempted to sell just yet. Now, they'll get there if this goes above 77K, most likely. They will be more than happy to sell. That's my guess. MVRV, this is on-chain versus market cap. So how much is moving on-chain in value relative to market cap? And again, not an overbought territory just yet. This is another way of saying, are people tempted to sell, right? If we go up several multiples, like Doge, for example, Doge 2x, BNB 2x, right? People instantly become less of a holder and more of a seller just naturally because they're up by several multiples. That's just how it works. Now, you do have the late FOMO people who get in at the top, but for the most part, buying demand will not keep up with the sellers who are down from 2x. Look at the coin direct listing, right? Like buying demand on the initial day did not keep up with selling demand from anybody looking to dump on retail, right? Like that's just how it works. That's how it's always going to work. And another way to look at that is the hodl wave. So if we look at the coin age, because it's a blockchain, you can see every coin that's ever moved ever and how old everything is. So if we look at coin age over the past 6 months, and you say, what percentage of the total coins on chain have moved in the past 6 months? And how does that look with price slapped onto it correlation wise? And historically, if coins in the past 6 months account for 50% of the total chain, it's basically marked an all-time high. All 3, 4, 5 times, whatever it is. Currently, we're around 37%. So again, another way of saying everything looks okay thus far for bullish continuation. The backtesting gives us permission for more. It's not quite overbought enough just yet. Now you can say past results don't predict the future, whatever, blah, blah, blah. I mean, this is what data is all about. This is what TA is all about. So we put that in a nice little chart here that I've been following for the past 2 weeks, at least in this chart. The pi cycle might look devastation, radiation, decimation, but everything else is fine. There's no big deal here. The sky isn't falling. I don't really think sentiment has found the pi cycle top too useful just yet, but just keep that in mind. All right, TA stuff. One last thing, I guess. BTC exchange reserves currently at multi-month lows, basically 1 year low. So supply demand kicking in decently here as there's just nothing for sale on exchanges, right? Relative to demand, price goes up. Miners outflow is muted and minimal. And you can see how outflows affected price on the way up. You can see how outflows got excited when price is increasing. This is natural. This is what you expect. Now, the caution here is that miners are selling less now with the expectation that price goes up. So as price goes up, they're going to sell more. And if the opposite is happening, if price goes down, they're going to panic sell big time, kind of like what they did in November 2018. And we'll see that on the outflows. But right now is like the calm before the storm as far as outflows are concerned. Anytime you have a concentration of whales, look at GBTC, for example. I don't have the chart up, but they have whatever, 250K BTC, right? There's always a concern that if something goes wrong there, that's just going to be a massive wallop on price. The Mt. Gox coins I was talking about Twitter yesterday, nobody's really talked about those recently, but when those get unlocked, that's just, that's the opposite of the exchange reserves. That's why it's the cleanest way to look at this. If exchange reserves go up, price goes down. I mean, that's just how it should work, Typically, there isn't enough buying demand to absorb that in the near term. So that's the caution. So right now, though, everything's fine. Miners aren't selling. They're selling less than they've sold in a long time. All right, TA. Start with the pitchfork. Everybody's favorite, including mine. 3 points, you get a rate of change. Median line is where price wants to live most of the time. Overbought, oversold. The overbought part of this is basically topped out around 80K. Our 4 yearly pivot at around 80K. Anything above that is asking for trouble on the overbought side, and that does match the MA multiplier. So slower is better. Let's just chill here. Let's just sideways up here. Obviously, if you're leveraged long, you're eating fees up here, you don't want to see price go slow. You want to see price move. But volume really hasn't kicked in yet. We really haven't had, we've maybe a subtle increase in volume, but overall just not much is happening up here. The 200-day moving average is around 38K, so it's moving up nicely. So if I'm looking for big supports on the way down, let's say the worst happens, right? China bans Bitcoin for the 65th time. 38K is what I'd be looking at immediately based on the 200-day moving average. I already have bids down there just in case. But trend-wise, everything looks great. Not overbought just yet. If we look at the alligator fractal, this is just 3 MAs with bull and bear fractals, which help you out for trailing stop losses and entries. So it gave you an entry a few days ago on this candle. How this works is any candle that closes above the wick or the body, whatever the bull fractal was, that's your bullish entry, so long as the MAs are crossed bullish, and your stop loss is around 55K, 55.5, whatever that is. So again, trend-wise looks fine. Cloud looks great. Almost never looked better. I'm concerned that this is very thick. You'd rather see a thin cloud. All this represents at this point is cloud hasn't had a chance to completely reset itself. We haven't gone sideways down enough for cloud to reset itself. So if cloud is thick, it gives a big potential for a bearish edge-to-edge move from 56 to 42, something like that. That's a remote possibility. Overall, I'm still buying any dips on the Kijun because that's how the cloud works. It continuously prints BTFD areas for you with a stop loss in the cloud. If we close in the cloud, you're stopped out. If we have a bearish TK cross, you're stopped out. Close your longs. That's how it works. So since October, it's been perfect. It's told you everything you wanted to know. If I had the choice to trade one thing only, it'd be that. If you look at the chart pattern, I talked about whoever, everybody's been talking about ascending triangle, so it's not just me. Point is, it did break out above the horizontal resistance. We did get a new all-time high. It is a little scared of its shadow and price discovery here. I'm still expecting higher highs. Conveniently, this target is below the 77K 2-year MA multiplier. And the B bands also got sort of tight, didn't really expand yet. Truth be told, I'm not a massive fan of B band trading. If I'm looking at B bands, then we've got probably better stuff to look at like this. I'm not worried at all about any sort of reversal or anything related to this just yet. I think it's fine. So BTC looks great. I expect higher highs. I expect continuation. I expect 77K plus. I expect absolute madness when we get there. ETH, same story. Exchange reserves just absolutely falling. Now ETH is a little bit more complex in that you can move it to DeFi and do a bunch of stuff there as far as shorting and whatever. But at the end of the day, exchange reserves falling drastically, dwindling quickly. If we look at ETH's MA multiplier, now this is the 365 MA, which is the 1 year, so it's half the 2 year, because that makes sense based on the data, based on available trading data. You can't really look at a 2-year MA multiplier for ETH because there isn't enough data. So again, sometimes it looks like this, right? You get an extended buy zone. Not always perfect, but these others are just, just snipe it. They snipe it. And as far as the sell zones as well, you get a pretty good target of that. That's the top, folks. That's the top. Here we get some continuation in that red zone, and we don't even pull back to the buy zone for the resell. Up here, hopefully you were looking at the ascending triangle, the Adam and Eve, whatever that was happening over here instead of this. But point being, it still looks good for an altcoin on the 1-year MA multiplier, projecting 3,700, buy zone sub 1K still. This will continue to move up day over day, but that should be close to the top when we get there, if we get there. I do like that we are consolidating on the midline. I do like that we are above the midline. Everything looks good for up, What else do you say about ETH, right? It's at the R5 yearly pivot, which is a bit concerning. It's interesting the 200-day moving average is basically outside of the pitchfork at this point and well above 1,000 now. So you're probably safe to just toss this pitchfork at this point because it doesn't really look like it's coming back anytime soon. The only ever time really I saw this was on BTC before the massive run up. It did retest the pitchfork. That was more news driven than anything, but that was basically the precursor to the explosion. That was when the rate of change was different, right? Complete different rate of change. Nevertheless, though, it did come back to that median line several times. You know, the top in 2019 was the pitchfork. So BTC is still above that old pitchfork now. You know, this stuff gets more and more wishy-washy and subjective, which I don't like. But it's just interesting to look at. A different pitchfork we can put on ETH, though, is aggressive, but it gives you this trajectory, which fits pretty well. It tells you the highs here. You know, we're not there yet as far as overbought territory, but maybe worth a watch in the near term. You know, and the idea is that we just hold this until we don't. So if this breaks down, then that's probably the end for ETH. That isn't the expectation, but you know, that's what I'd be watching. I like that it held below the midline, held this resistance. You know, it looks like it fits pretty well. So worth a watch for sure. And it looks fine for bullish continuation. Alligator fractal tells you get long on the horizontal break the other day around 2100. Not exactly rocket science. Currently showing a trailing stop around 2000. So that looks good trend wise. Cloud, again, absolutely proud of the Cloud for showing what you want it to show you. I mean, look at this crazy edge case, right? So Cloud prints 30 periods based on my settings ahead of time. And so back here, it was like, you know, this is where the support's going to be. If we get into the Cloud here, we're in trouble. And we didn't close in the Cloud. It wicked into it, but it didn't close into it. You're getting Kijun bounces over and over again, whatever. Everything looks great. You know, I couldn't want anything more out of a trend indicator than the Cloud is showing you here. The issue with the Cloud and why I have to use other stuff like the MA multipliers is because it doesn't show you upside resistance potential, right? It just says the trend looks great. The trend looks great. The trend looks great the entire time, right? It says buy here. The trend looks great. But it doesn't really give you upside targets, which is why I use stuff like MA multiplier, stuff like chart patterns. ETH had some sort of something, ascending triangle, whatever this was, retested the resistance turn support and off it went. It's currently within that zone if you consider this pattern more valid than this one. You know, depending on how you draw this could be a little different, but in any case, 2,500 is a place where price will probably relax a little bit. This is the monthly pivot versus the yearly pivot. So if we do break 25, you're going to have to look at monthly pivots because unless you're going to manually calculate these, it doesn't make sense to watch the yearly pivots anymore. So the R3 is 2,600. So between 25 and 26, I'd imagine we relax a little bit. We slow down a little bit. Lastly, on the ETH-BTC pair, the only thing that really makes sense to me, this is the weekly. For me, just zoom way out because it's very much a random walk of untradeable noise. It's still in the weekly cloud, won't be out of the weekly cloud until June this year, so long as price goes sideways. So there's an expectation, again, if you have a pitchfork on a chart, the expectation is it's just going to ride that sucker all the way home forever. You know, that's trend is your friend. If we break below this, we'd be breaking below the yearly pivot, below the cloud, below the pitchfork, and ETH's in trouble. That means ETH failed. If all that happens, it's over for ETH, right? We're talking about new all-time lows probably, or whatever this is, multi-year lows. Remote possibility, right? But that's why you have this stuff on your chart to say, what does the trend look like? So the expectation is we just sort of curl in between the midline and the white diag here on the pitchfork. Until we break this midline, I'm not really confident we are going to break this midline. We probably have the best chance to do it when we're above the weekly cloud. But overall, it looks fine. You know, I don't trade it directly per se, but it's obviously had a banger of a couple weeks lately. The last thing I'll just mention is the ETH BTC portfolio that I trade on enzyme.finance for Techme Capital. You can see everything here. It's non-custodial portfolio management. Allocation trades, you can see I got into BTC at this exact time, how I did it, blah, blah, blah. You know, you can see everything here. It's transparent. We also have a DeFi portfolio that I just started allocating positions last night. So if you have any questions about that, let me know in the comments below. Just share, subscribe. Talk to me in the comments. What do you think about my targets? Am I too bearish, right? Am I too bearish at 77K plus? Am I too bearish at 3,700K plus? 3,700K, 3,700 plus for ETH? Let me know. Happy trading.